Welcome to this module on developing professional working relationships in the accounting sector. In today's dynamic business environment, building trustworthy relationships, understanding the detailed roles of accountants and bookkeepers, communicating clearly with stakeholders, and upholding ethical principles are not only desirable, they are essential. This guide will walk you through the necessary steps and practices that finance professionals need to embrace in order to foster an environment of trust, accountability, and continuous improvement. Let us begin by examining the importance of professional relationships in finance. At the heart of successful financial management lies the need for credibility and mutual trust. Every finance professional, whether an accountant, bookkeeper, or an advisor, is responsible for upholding the integrity of the business processes they are involved in. Building strong relationships is about more than just maintaining an accurate ledger. It is about creating a foundation of trust with clients, stakeholders, and peers. When you operate ethically and follow established legislation and codes of practice, you not only protect your reputation, but also safeguard the future of your organization. Failing to adhere to these standards may result in legal consequences and can tarnish the credibility of the financial services you offer. In this guide, we will explore several key themes. First, we will look into the critical task of building trustworthy relationships with the end customer and all stakeholders. We will see how essential it is for finance professionals to be diligent, ethical, and consistent in their approach to everyday tasks. You will learn how identifying and applying the right legislative measures in your work processes sets the stage for responsible financial management. Now, let's delve into the process of clarifying business needs and expectations. At the core of every financial engagement is the central role played by accountants and bookkeepers. These professionals provide a range of services including business advice, accounts administration, clerical accounting, and meticulous bookkeeping. It is imperative that finance professionals deeply understand the business they serve. This begins with analyzing the flow of cash, generating clear and accurate financial reports, and synthesizing the data into actionable insights for business owners and managers. While there are similarities in the functions of accountants and bookkeepers, it is important to recognize their distinct roles. Accountants are primarily focused on interpreting and summarizing financial data. Their expert analysis helps business owners understand the current financial situation, manage budgeting, and protect existing assets while planning for future investments. On the other hand, bookkeepers are responsible for maintaining the day-to-day accounting systems and ensuring that every transaction, whether it is a sale, a purchase, or any form of payment, is recorded accurately. They are the custodians of the original financial data and are integral to preparing for the accountant's audit and review processes. Clear communication underpins all these activities. It is not enough to simply record data. You must also translate this information so that stakeholders, from business owners to tax agents, understand the financial landscape. Communication should be direct, honest, and tailored to the audience. For instance, when discussing the current financial state and the future direction of a business, using data-driven reports that highlight both strengths and areas for improvement can significantly enhance stakeholder confidence. This structured approach not only manages expectations, but also encourages collaboration among team members and external partners. One of the prerequisites for successful financial management is the identification and prioritization of stakeholders. In any business, different stakeholders play varied roles based on their influence and level of engagement. For a large finance company, investors might be prioritized because their resources and demands directly translate into profitability and confidence in the company's market position. In smaller organizations, the emphasis might be more on internal stakeholders such as management and staff, who are directly involved in the day-to-day operations. Identifying who holds influence and understanding their requirements helps finance professionals align their strategies with actual business needs. There are several proven methods to gather and categorize stakeholder requirements. Start by interviewing the key personnel, arranging group workshops, or even presenting a working prototype when possible. Listening to the stakeholders and capturing their feedback can reveal hidden gaps between the current state of the business and its future aspirations. Once this information is collected, categorizing it into practical functional segments enables a much clearer understanding of the business's needs. This approach not only addresses immediate concerns, but also sets the stage for long-term improvements in financial management, leading to business growth and enhanced performance over time. After addressing the need for clear communication and understanding of business expectations, we now turn our attention to defining roles and responsibilities within the finance function. It is critical that each member of the finance team is clear about what is expected of them. Whether you are a seasoned accountant or a dedicated bookkeeper, understanding your specific duties and limitations will help you perform your job efficiently. This clarity is vital for effective delegation, and it ensures that every team member aligns with the broader organizational objectives. For example, while an accountant's responsibilities may span tasks such as financial analysis, auditing, producing financial statements, and advising on tax matters, there is a defined scope to their role. They focus on strategic decision-making and financial forecasting, drawing on the meticulously recorded data provided by bookkeepers. Bookkeepers, on the other hand, are tasked with the detailed recording of financial transactions, payroll management, and day-to-day financial monitoring. However, they do not typically step into roles that require the analytical or advisory insights characteristic of an accountant's job. Recognizing these distinctions is vital to prevent role overlap and to ensure that each professional remains within the boundaries of their expertise. Beyond delineating responsibilities, it is also critical to be aware of tasks that fall outside your own role. In today's interconnected business environment, no single professional can master every aspect of financial management on their own. When faced with tasks that exceed your scope, such as definitive decisions on loan approvals, complex legal compliance matters, or nuanced investment recommendations, it is important to consult the appropriate specialist. This collaborative approach not only expedites problem solving, but also guarantees that the business benefits from the specialized expertise of various professionals. Building a network that includes credit risk analysts, compliance managers, or investment analysts enriches your overall capacity and mitigates the risk of errors. Networking with other professionals is an essential strategy for managing roles effectively. Beyond the internal structure of your organization, forming relationships with external professionals, such as auditors, legal advisors, and industry-specific experts, fosters a collaborative environment. These networks become invaluable when challenges arise, as you can refer business owners and clients to those with the expertise required to resolve specific issues. Effective networking is about knowing when to refer someone outside your immediate circle and how to leverage these external resources to benefit your practice and enhance the quality of service delivered to clients. Another key element of effective professional practice in finance is the ongoing process of requesting and incorporating feedback. Feedback is the cornerstone of continuous improvement in any professional setting. Understanding the range, scope, and quality of the services you provide is crucial. By actively seeking feedback from various partners, including business owners, colleagues, managers, and even customers, you can gain a well-rounded perspective on performance and areas in need of enhancement. When requesting feedback, it's important to be clear about your intentions. Whether your goal is to refine internal processes or to increase client satisfaction, you must ensure that the questions asked are aligned with your objectives. For effective feedback, one can utilize surveys, direct interviews, focus groups, or even informal discussions. Each method brings valuable insights that can help to identify what is working well and what might be improved. For instance, a personal meeting with a client or a detailed survey can uncover subtle issues that might not be visible through standard reports. Furthermore, the manner in which feedback is received is equally important. A positive mindset that welcomes constructive criticism can transform feedback into a powerful tool for growth. When you listen actively and consider the feedback as a stepping stone to enhance performance, the outcomes typically include better alignment of services with client needs, optimization of internal processes, and ultimately the growth of both individual capabilities and the broader organization. Preparing specific questions ahead of these feedback sessions and taking the time to analyze responses critically ensures that the feedback is not only received but also acted upon in a meaningful way. This segues nicely into the commitment to ethical practices and principles, which forms the backbone of every professional engagement in finance. Ethics in finance is about adhering to standards that serve both the public interest and the interests of individual clients. It is vital that every accountant and bookkeeper operates with a full understanding of the moral and legal guidelines that govern the industry. Maintaining ethical standards is not simply a legal obligation. It's a professional imperative that instills confidence and trust in clients and stakeholders. The ethical framework within the financial services sector is built upon 5 fundamental principles. Firstly, integrity demands that you remain honest and straightforward in every professional interaction. This involves not engaging in any conduct that may bring discredit upon yourself or your colleagues. The second principle, objectivity, requires that you set aside personal biases and conflicts of interest, ensuring that your judgment is always fair and balanced. The commitment to professional competence and due care means that you must continually maintain and update your knowledge and skills, ensuring that your advice is based on current best practices and legal standards. Confidentiality is another cornerstone of ethical conduct in finance. Respecting the confidentiality of client information is essential, as it builds a secure foundation for all future interactions. Finally, professional behavior mandates that you comply with all relevant laws and regulations, avoiding actions that may detract from the trust placed in you by the public or your clientele. Together, these ethical principles form a guide that ensures your professional actions are not only legally compliant, but also morally sound. In practice, applying these ethical principles involves more than just adherence to a set of rules. It means taking active steps to integrate ethical considerations into all aspects of your work. For instance, safeguarding client privacy is a daily responsibility. Whether you are preparing financial statements or communicating with a stakeholder, it is imperative to ensure that sensitive information is protected. Compliance with industry codes of conduct, clear communication about the services you offer, and honest disclosure about any limitations in your expertise are all reflections of ethical practice. Moreover, adhering to ethical principles fosters an environment where accountability and transparency are paramount. When you maintain a high standard of ethical conduct, you not only shield yourself from potential legal consequences, but also enhance the overall reputation of your practice. This, in turn, facilitates stronger professional relationships and builds a network of trust among colleagues, clients, and broader stakeholders. As we draw close to the conclusion of this guide, it is important to connect all the points we have discussed. Starting with the foundation of building trustworthy relationships, you have seen how critical it is to understand business needs through clear communication and tailored stakeholder engagement. You have learned to define your role and responsibilities clearly, identifying where your expertise ends and when to lean on the specialized abilities of others. You have also discovered the methods and benefits of soliciting, receiving, and implementing constructive feedback to drive continuous improvement. Finally, you have explored the crucial area of ethical principles in the finance profession. principles that guide every decision and action, maintaining the integrity of the financial services industry. In summary, the modern finance professional must be more than just a number cruncher. You are a trusted advisor, a communicator, a collaborator, and an ethical steward of the financial health of your organization and your clients. By focusing on building strong relationships, communicating effectively, understanding your own limitations, and upholding the highest ethical standards, you position yourself as a valuable asset, not only to your organization, but also to the broader financial community. Remember that every step you take towards fortifying these professional relationships contributes to a more efficient, transparent, and robust financial sector. As you continue your professional journey, keep in mind these guiding principles. Seek out opportunities for feedback and professional development. Do not hesitate to refine your processes and expand your network with others who share your commitment to excellence in finance. Whether you are preparing a financial report, engaging with a stakeholder, or deciding to defer a challenging task to a specialist, let integrity, clear communication, and a customer-first mentality drive your actions. Thank you for investing your time in understanding these core concepts. As you implement these practices in your daily work, you are not merely following a checklist. You are actively contributing to the reliability and growth of the financial services industry. We encourage you to take these lessons and apply them in your role, ensuring that every financial operation you oversee is characterized by trust, clarity, and unwavering ethical conduct. Your commitment to these ideals is the cornerstone upon which successful, sustainable financial futures are built. Remember, the journey of professional excellence is ongoing. By continuous learning, engaging with peers, and embracing the challenges of clear communication and ethical practice, you pave the way for an innovative, transparent, and resilient finance sector. We hope that this guide serves as a valuable resource in your professional toolkit, empowering you to make informed decisions and build stronger bonds in every aspect of your career. Thank you for joining us on this exploration of developing professional working relationships in finance. We wish you success in every financial endeavor and in building a future where ethical standards, clear communication, and mutual trust are the pillars of success.